All right, Matt, the mortgage guy here. In today's video, I'm going to talk about home equity line of credit versus a cash out refinance. Which one might be better for you? What is a home equity line of credit? What is a cash out refinance? Pros, cons, all that good stuff. Stay tuned because I'll give you a good idea based on your scenario, what your loan balance is, what the interest rate is, and what you're looking to do on which one might be better for you. All right, Matt, the mortgage guy here, residential mortgage broker. If you're looking to connect with me and my team and have us look at your specific scenario, just go to greatmortgagebroker.com, fill out the quick form. We will be in touch. If you're looking for a great real estate agent in your area, go to homeandmoney.com/Matt. Okay, with that out of the way, let's first talk about what is a home equity line of credit, what is a cash out refinance. Then we can dig into pros and cons and which ones might be better for you. Home equity line of credit is a line of credit against the equity in your home. And it's a revolving line where you might get a $50,000 credit line where you can borrow up to the $50,000. You pay that down and then you can pull more out, right? Let me give you an example. You have a house that's worth $400,000 and you owe $250,000. You've got $150,000 in equity. You can go to the bank, a credit union, a broker like myself, and go out and get yourself a home equity line of credit. And let's say for this example, you need $50,000. That $250,000 you owe on the first mortgage, you leave it alone at a 3% interest rate or whatever you've got. You borrow that $50,000, and some banks offer adjustable rates. There's fixed rate available home equity lines of credit, but that's just on that $50,000, whatever that rate is, 8% or 9% on that $50,000 you borrow. It's to consolidate credit card debt. It's to do, an addition on your home, whatever the case may be. That's generally what it is. Consolidate debt, big repairs and whatnot, but it's a separate loan. You borrow that $50,000, and depending on the terms of that loan, you're making monthly payments, either interest only or interest plus principal. And then as you pay it down, if you'd like to go back after some more debt, say you pay it down to $35,000, and then some college debt comes up for a kid. You pull out another 10, you pay for another semester of college, whatever the case may be. It's a line of credit that you can continue to draw from and pay back and draw from and pay back. And so that's how a home equity line of credit works. If you do a cash out refinance, same scenario, you owe $250,000, your house is worth $400,000. The bank's generally willing to go up to 80% of what the house is worth on a cash out refinance. So follow me. $400,000 value of the home times 80% is $320,000. In that case, you have a new loan amount of $320,000. You might have some title fees. You might prepay some tax and insurance and some other lender fees and whatnot built into that. So you pay off the first loan of $250,000. You've got $5,000, $6,000, $8,000 worth of fees and a new loan balance of $320,000. Quick math, $64,000 in your pocket, give or take, right? So then you've got that $64,000. You go do debt consolidation. You've got, a big expense, a big home improvement, whatever the case may be. You spend it. You've got one new mortgage at $320,000, one new payment, one new interest rate, right? So that's a cash out refinance. What are the pros and cons of both of those? Home equity line of credit, pro, generally less fees involved. These things can be an application fee. There might be, a setup or a point charge to you for these. But in general, they're going to be fairly low cost. Some of them will involve an appraisal, some won't. But there's going to be less involved with a home equity line of credit when it comes to costs in general. So that's a pro. A con might be that a lot of them are adjustable. I personally have some fixed rate home equity line of credit products for those that are interested. Again, greatmortgagebroker.com. Give us a holler. But the adjustable rate can definitely be a con for some people that don't want any sort of adjustable rate loans just because of the inherent risk that comes with an adjustable rate mortgage. Now let's move over to cash out refinance. Cash out refinance pro would be fixed rate. Almost all the loans we write nowadays are a fixed rate term. It's going to be one payment, so it's all in one. A con might be that some of the costs involved might be more expensive. Lender fees might be more expensive. Title fees might be more expensive. There's more involved with this when it comes to fees. Not all the time, but in general, right? Another con of a cash out refinance is if your first is currently sitting at 3% and you say, hey, I need this $60,000. I really need it. I've got all this home equity. And so your first balance of $250,000 that's at 3% is this payment. You go out and do a cash out refinance where your new rate is 5% and $320,000. That's going to add a significant amount to your monthly mortgage payment. Is it $500? Is it $600? Is it $700? It depends on your starting rate. It depends on the rate you're getting today. It depends on how much cash you're getting. But that can definitely be a con, is that you're increasing the interest rate on all the money you're borrowing. So rule of thumb, if you want my advice on whether you should do the home equity line of credit or a cash out refinance, here's some general things to think about. If you owe $550,000 currently, and you've got that $550 locked into 2.75%, and you're looking to get $60,000 for whatever the cause is, right? Almost always this is a no-go. And I would say almost is probably generous. Always leave that 2.75 first $550,000 alone. Because when you refinance and do a cash out refinance and now you owe $610 at 5% or 5.25%, or whatever that rate is on the cash out refinance, you're paying back all that debt at the higher interest rate, right? You would be much better off leaving the $550 alone. It's locked in at 2.75% or 3% or 3.25% for a 30-year term. And that additional $60,000 you need, you can pay 8%, 9%, 10%. It's only on that $60,000. You're not paying a higher interest rate on all of it. So if you took $550 at 2.75 and $60 at 9% and did some sort of blended rate calculation, you'd be in the low threes versus all of it at 5.25. Hopefully that makes sense. It's a no-brainer. On the other hand, let's say you have a house that's worth $500,000 and you only owe $72,000. You're looking to get out $160,000 worth of that equity, right? In this case, it might make sense to do a cash out refinance. Sure, your rate's 3%, but it's only on $72,000. Rather than leave that alone and go get $160,000 on a home equity line that might be 8 or 9% fixed, or an adjustable that starts at 5 or 6 and will eventually probably be 8 or 9. Do a cash out refinance for all of it. Have a new balance of whatever it is, $240,000 or so, at 5%, at 5.25%, 30-year fixed, one payment, right? And so what you owe, the more you owe and the lower the rate, the more you lean towards home equity line of credit. The less you owe and the higher the rate, and the higher the amount that you're pulling out, right? If the amount you're pulling out is greater than the amount that you owe, that might be a sign that you're going to look at a cash out refinance. If the amount you're pulling out, like the example I used, $550 balance versus $60,000 being pulled out, if this is 20% or less of this, then you're probably almost always going to do a home equity line of credit. Hopefully that was helpful. That was really general. Know that anything to do with mortgage, it's really specific, right? So I couldn't possibly go over the 55 million scenarios from every single person in every single scenario, right? Because some people are going to have unique scenarios where you go, you know what? That doesn't fit into the general bucket. For you, a home equity line of credit probably makes sense. For you, that's going to do X, Y, and Z, and you're going to sell your house in 15 months, maybe you do this, cash out refinance versus the home equity line of credit because of this, right? So specifics, reach out to somebody you like and trust. If you want to talk to my team, we're happy to help. greatmortgagebroker.com, or somebody local who you like and trust. Whoever you work with, Just explain the scenario, have them explain to you what they think the best case scenario is, home equity line of credit or cash out refinance, and why. And hopefully they're able to put it in simple enough terms to where it makes sense. Thanks for watching. Hope this was helpful. Until next time, we gonna see. I never mentioned Get Better Everyday Podcast. I got to start doing that. I got to start mentioning Get Better Everyday Podcast on Spotify and Apple Podcasts. That's a really fun passion project I'm working on. We should probably leave this at the end of the video and see if anybody watches this far. If you watch this far, that means I added some value. If I added some value, you're probably going to enjoy Get Better Every Day. It's a pretty cool podcast. I'm talking to entrepreneurs. I'm talking to mortgage professionals. I'm talking to people who are high-level athletes and crushing it there, restaurant owners. Cool things going on. Get Better Every Day. Go check it out.